Interest rates have risen to an average of almost 7.5% the last 2 weeks due to hotter than expected inflation data. And I wanted to show you what happens to demand for housing as interest rates rise and interest rates fall, and what that means to you and what that means for potential opportunity for you as well. My name is Todd Baker, DFW mortgage planner and certified mortgage planner, and I just got back from my son's wedding. We actually took a road trip out to the Redwoods in California where they had a destination wedding. And then my wife and I took a longer road trip back, and we swung through several states on the way back to Texas, here home in Texas. And one of the things I can tell you that struck me is I took the time to look at home prices. And this was, obviously California is really high, but Oregon, Idaho, I was surprised in Idaho, in Boise, Idaho, houses that we could buy here in Texas for $350,000, $400,000 were like $800,000 there. And so the point is that no matter where I went, the inventory was really low, prices were really high, and it points to what I've been preaching on this channel for a while, is that we have a systemic housing shortage in the United States of America. And the only thing keeping a lid on prices not going up very, very rapidly based on the supply and demand unequilibrium is the fact that mortgage rates are higher and creating an affordability issue. Affordability is a challenge because of rates, taxes, insurance, and prices all hitting at one time. And what we have in the United States right now is about 4 million buyers nationally as a baseline. And those buyers can afford to buy, and we've got several million others that are waiting for rates to come down so that affordability, at least the perception of affordability is there and they can go buy. What's going to happen when rates do drop, and I'm going to show you this right now, is a lot of people go to the market and it's going to cause prices to go up. So let me show you this chart. There's a really good chart we did. Demand based on rate environment, 30-year fixed rate. So if you look, this is from January. This is in the mid-sixes. Rates started to rise, and then by February they came down a little bit. And they came down to about 6.5. And really the first half of this year, we had really much higher demand, much higher mortgage applications. And we were thinking we were going to get into this range. And you can see buyer demand, weak, limited, good, and strong. And we know under 6% it's strong. So as rates have spiked, they sort of went up to 7, and they sort of fought the battle between low 7s, high 6s. And then last week, you see it just spiked up where demand is now considered weak. And so this line will just continue going as time goes on. Eventually, it's going to go down to good and strong. When it hits into that good to strong, you're going to see a massive change in the way with interest rate, with the way prices are. And here's why. All those buyers that have been sitting on the sideline are going to rush in, and we have a 90-day supply of houses. So if you're in that category right now that can afford to purchase, and affordability is a payment based on a percentage of your income, it's a mortgage planning function, then you should consider buying. And if it's a matter of cash out of pocket, we have a Service First 40% share of the builder business in North Texas right now, meaning we're a preferred lender. On new construction, we can get you in with huge incentives. We're adding to those incentives on our new construction. And in existing homes, many times, you can still get a seller to pay closing. Not always, but many times. You certainly don't have to bid in almost all cases way over list, although we do see that once in a while. So I hope you found this helpful. That's sort of where rates are at, where demand is at, and I hope you have a great weekend. Please feel comfortable reaching out to me or referring me to your family, your friends, anybody you know that needs a great mortgage plan. I will take great care of it for you. Thanks so much.